Are you ready to transform your financial future? Imagine doubling your money in just 5 years without the stress of risky ventures. In this video, we're revealing 10 high-yield dividend stocks with the potential to turn a $10,000 investment into $20,000. These aren't just any stocks. These are powerhouse companies with robust financials, consistent dividend growth, and strategic market positions. Picture yourself collecting dividends like clockwork, watching your portfolio grow exponentially. Stick with us to discover which stocks made our list and get ready to take your investing game to the next level. Don't forget to like, subscribe, and hit the notification bell for your ticket to financial success. By the end of the video, you'll be equipped with the game plan to potentially double your money in just 5 years through 10 rock-solid dividend stocks. We're zeroing in on companies offering dividend yields between 2.5 and over 7%. With a track record of consistent annual growth and unbeatable financial health, imagine your $10,000 investment growing into $20,000, all the while enjoying regular, reliable dividend payouts. We'll break down each stock's performance, yield, payout ratios, and growth prospects, providing you with the essential numbers to make savvy investment choices. Stay tuned and let's kickstart your journey to financial success. Don't forget to subscribe for more wealth-building insights. Parcel Service. Harry is considering investing in United Parcel Service to double his money in 5 years. UPS, a leading global package delivery and supply chain management company, is currently offering a dividend yield of 4.2%, which is notably higher than many competitors in the logistics sector, like Yahoo Finance. The company has consistently increased its dividend for over a decade, highlighting its commitment to returning value to shareholders. The current payout ratio stands at around 50% and indicating that the dividends are well supported by the company's earnings, leaving ample room for future increases. If Harry invests $10,000 in UPS, his annual dividend income would be approximately $420. Assuming UPS continues its trend of increasing dividends by an average of 5% annually, his dividend income would rise to around $441 in the second year, $463 in the third year, and so on. The steady growth in dividends can significantly enhance Harry's total returns over time. UPS boasts a strong return on investment capital of 21%, placing in the top quintile among S&P 500 companies. The high ROIC indicates UPS's efficiency in generating profits from its investments, a critical factor for sustainable growth. Additionally, UPS is trading near its 10-year low valuation, making it an attractive investment opportunity. Over a year holding period, assuming a conservative 5% stock price appreciation, Harry's $10,000 investment could grow to approximately $10,500 plus $420 in dividends, totaling $10,920. Over 3 years, with compounded growth and dividends reinvested, his investment could grow to around $12,462. Over 5 years, assuming continued growth and reinvestment of dividends, Harry's initial $10,000 could grow to approximately $16,500, considering both stock appreciation and increased dividend payouts. UPS is also expanding its healthcare logistics business, expected to account for over 10% of its sales by the end of the year. Strategic acquisitions and joint ventures in international markets like Latin America and India further bolster its growth prospects. With a robust financial position and strategic growth initiatives, UPS presents a compelling case for potentially doubling Harry's investment within 5 years. Harry's potential investment in UPS is supported by the company's strong financial metrics, growth strategies, and attractive dividend yield, making it a promising option for long-term growth and income. Murphy USA. Harry is considering investing in Murphy USA, a prominent player in the retail fuel and convenience store sector. To potentially double his money in 5 years is a detailed analysis of MUSA to guide Harry's decision. Murphy USA operates over 1,600 retail fuel stations, primarily in the United States, offering a strong foothold in the fuel retail industry. As of 2024, MUSA has a dividend yield of 1.6% with an annual dividend of $1.68 per share. Although the yield is modest compared to some high dividend stocks, MUSA's focus on growth and operational efficiency sets it apart. MUSA's payout ratio is notably low at around 15%, indicating that the company retains a significant portion of its earnings to reinvest in growth opportunities. This low payout ratio is beneficial for sustaining future dividend increases and enhancing the company's capital for expansion and modernization projects. If Harry invests $10,000 in MUSA, his annual dividend income would be approximately $160, assuming MUSA continues to grow its dividend by 10% annually. His dividend income would increase to about $176 in the second year and $194 in the third year. MUSA has demonstrated robust financial performance with a 5-year compound annual growth rate of approximately 13%, driven by strategic acquisitions, cost control, and expanding its convenience store offerings. The company's return on invested capital stands at around 19%, reflecting efficient use of capital to generate return. Over a 1-year holding period, assuming a moderate 10% stock price appreciation, Harry's $10,000 investment could grow to around $11,000 plus $160 in dividends, totaling $11,160. Over 3 years with compounded growth and dividends reinvested, his investment could grow to approximately $13,310. Over 5 years, assuming continued growth and reinvestment of dividends, Harry's initial $10,000 could potentially grow to around $17,000. MUSA's strategic initiatives such as enhancing its convenience store offerings and focusing on high-margin products support its growth prospects. The company's low expense ratio and strategic operational movements and improvements contribute to its strong financial health, making it a promising investment for doubling Harry's money in 5 years. Harry's potential investment in Murphy USA is backed by the company's strong financial metrics, growth strategies, and prudent capital allocation, making it an attractive option for long-term growth and income. Medtronic is a leading global medical device company renowned for its innovation and extensive product portfolio aimed at treating a wide range of chronic diseases. As of 2024, Medtronic offers a dividend yield of 3.28% with an annual dividend payment of $2.76 per share. The company has an impressive track record of increasing its dividend for 46 consecutive years, earning its dividend aristocrat status. Medtronic's payout ratio is approximately 50%, indicating a balanced approach to rewarding shareholders while retaining earnings for growth. If Harry invests $10,000 in Medtronic, his annual dividend income would be around $328. Assuming Medtronic continues to increase its dividend by 7% annually, his dividend income would rise to approximately $351 in the second year and $375 in the third year. Medtronic's financial performance has been robust with a 5-year annual compound growth rate of around 8%. The company's strategic focus on innovation, coupled with its diversified product portfolio, supports sustainable growth. Medtronic's expense ratio is low due to its efficient operations and scale, allowing it to maintain high profitability and reinvest in research and development. Over a 1-year holding period, assuming a moderate 8% stock price appreciation, Harry's $10,000 investment could grow to approximately $10,800 plus $328 in dividends, totaling $11,128. Over 3 years with compounded growth and dividends reinvested, his investment could grow to approximately $13,500. Over 5 years, assuming continued growth and reinvestment of dividends, Harry's initial $10,000 could potentially grow to around $16,500. Medtronic's strategic initiatives include expanding its presence in emerging markets, investing in innovative technologies like minimally invasive therapies, and enhancing its core product lines. The company's strong balance sheet with manageable debt levels and consistent cash flow generation underpins its ability to sustain and grow its dividend payouts. Harry's payout investment in Medtronic is supported by the company's strong financial health, consistent dividend growth, and strategic focus on innovation and market expansion, making it a promising option for long-term growth and income. Duke Energy. Harry is considering investing in Duke Energy, a leading utility company in the United States, to potentially double his money in 5 years. Here's a detailed analysis of Duke Energy to help Harry make an informed decision. As of 2024, Duke Energy offers a dividend yield of approximately 4.00% with an annual dividend payment of $4 per share. The company has a strong track record of paying dividends, consistently increasing them over the years. Duke Energy's current payout ratio is around 75%, indicating that the company returns a substantial portion of its earnings to shareholders while retaining enough to fund its operations and growth initiatives. If Harry invests $10,000 in Duke Energy, his annual dividend income would be approximately $400. Assuming Duke Energy continues to increase its dividend by an average of 3% annually, his dividend income would grow to approximately $412 in the second year and $424 in the third year. Duke Energy's financial performance has been stable, with a 5-year compound annual growth rate of around 6% in dividend payments. The company operates in a regulated environment which provides a predictable revenue stream and supports consistent dividend payments. Duke Energy's expense ratio is relatively low due to its efficient operations and scale, contributing to its overall profitability. Over a 1-year holding period, assuming a conservative 5% stock price appreciation, Harry's $10,000 investment could grow to approximately $10,500 plus $400 in dividends, totaling $10,900. Over 3 years with a compounded growth and dividends reinvested, his investment could grow to approximately $12,200 over 5 years. Assuming continued growth and reinvestment of dividends, Harry's initial $10,000 could potentially grow to around $14,500. Duke Energy's strategic initiatives include investing heavily in clean energy projects, aiming to reduce its carbon footprint and enhance its renewable energy capacity. This focus on sustainability is expected to drive long-term growth. Additionally, Duke Energy's strong balance sheet with manageable debt levels and consistent cash flow generation underpins its ability to sustain and grow its dividend payouts. Harry's potential investment in Duke Energy is supported by the company's stable financial metrics, consistent dividend growth, and strategic focus on clean energy, making it a promising option for long-term growth and income. PNC Financial Services. PNC Financial Services, a major regional bank in the United States known for its diversified financial services, including retail banking, corporate banking, and asset management investment. As of 2024, PNC offers a dividend yield of approximately 3.98% with an annual dividend payment of $6 per share. The company has a strong history of increasing its dividend, reflecting its commitment to returning value to shareholders. The current payout ratio stands at around 35%, indicating that the dividends are well covered by earnings and allowing room for future increases. If Harry invests $10,000 in PNC, his annual dividend income would be approximately $398. Assuming PNC continues to increase its dividend by 6% annually, his dividend income would rise to about $422 in the second year, $447 in the third year, and so on. The steady increase in dividends can significantly boost his overall returns. PNC's financial performance has been robust, with a 5-year compound annual growth rate in dividend payments of around 8%. The company operates with a strong return on equity of approximately 10%, indicating efficient use of shareholders' equity to generate profits. PNC's expense ratio is managed well, contributing to its overall profitability and allowing for sustainable growth. Over a 1-year holding period, assuming a moderate 8% stock price appreciation, Harry's $10,000 investment could grow to approximately $10,800 plus $398 in dividends, totaling $11,198. Over 3 years, with compounded growth and dividends reinvested, his investment could grow to approximately $13,746. Over 5 years, assuming continued growth and reinvestment of dividends, Harry's initial $10,000 could potentially grow to around $17,800. PNC's strategic initiatives include expanding its digital banking capabilities and growing its asset management business. The company's solid balance sheet with manageable debt levels and consistent cash flow generation supports its ability to sustain and grow dividend payouts. Additionally, PNC's focus on innovation and customer-centric services positions it well for future growth. Harry's potential investment in PNC Financial Services is supported by the company's strong financial metrics, consistent dividend growth, and strategic focus on expanding its services, making it a promising option for long-term growth and income. Kinder Morgan. Kinder Morgan is one of the largest energy infrastructure companies in North America, specializing in the transportation and storage of natural gas, crude oil, and other petroleum products. As of 2024, KMI offers a dividend yield of approximately 5.78% with an annual dividend payment of $1.13 per share. The company's dividend yield is significantly higher than the average of the sector, making it an attractive option for income-focused investors. Kinder Morgan has a payout ratio of around 90%, indicating that it has returns a large portion of its earnings to shareholders in the form of dividends. Despite the high payout ratio, KMI's strong cash flow generation from its vast network of pipelines and storage facilities supports these dividend payments. The company's financial performance has been solid, with a 5-year compound annual growth rate in dividend payments of approximately 6%. If Harry invests $10,000 in KMI, his annual dividend income will be approximately $578, assuming KMI continues to increase its dividend by 5% annually. His dividend income would rise to about $607 in the second year, $637 in the third year, and so on. This consistent increase in dividends can significantly boost his total returns. Over a 1-year holding period, assuming a moderate 6% stock price appreciation, Harry's $10,000 investment could grow to approximately $10,600 plus $578 in dividends, totaling $11,178. Over 3 years, with compounded growth and dividends reinvested, his investment could grow to approximately $13,350. Over 5 years, assuming continued growth and reinvestment of dividends, Harry's initial $10,000 could potentially grow to around $16,900. Kinder Morgan's strategic initiatives include expanding its natural gas infrastructure and investing in renewable energy projects. The company's strong focus on capital discipline and operational efficiency supports its growth prospects. Additionally, KMI's extensive asset base provides a stable revenue stream, underpinning its ability to sustain and grow dividend payouts. Harry's potential investment in Kinder Morgan is backed by the company's strong financial metrics, consistent dividend growth, and a strategic focus on expanding its energy infrastructure, making it a promising option for long-term growth and income. Devon Energy. Devon Energy is a major U.S. oil and gas exploration and production company. As of 2024, DVN offers a forward dividend yield of approximately 9.46% with an annual dividend payment of around $4 per share. This high dividend yield is a result of Devon's fixed plus variable dividend strategy, which adjusts payouts based on commodity prices and earnings. Devon Energy's payout ratio is currently about 50%, reflecting a balanced approach to rewarding shareholders while retaining earnings for reinvestment in growth opportunities. The company has a robust cash flow generation capability supported by its cost-effective and cost-efficient operations and strong presence in key U.S. shale plays such as the Permian Basin. If Harry invests $10,000 in DVN, his annual dividend income would be approximately $946, assuming Devon Energy continues to grow its dividend by an average of 5% annually. His dividend income would increase to about $393 in the second year, $1,043 in the third year, and so on. The steady increase in dividends can significantly boost his overall returns. Devon Energy has demonstrated strong financial performance with a 5-year compound annual growth rate in earnings and dividends of around 12%. The company's strategic focus on maintaining low operation costs and improving efficiency support its growth potential. Additionally, DVN's strong balance sheet with manageable debt levels enhances its ability to sustain and grow its dividend payouts. Over a 1-year holding period, assuming a moderate 8% stock price appreciation, Harry's $10,000 investment could grow to approximately $10,800 plus $945 in dividends, totaling $11,746. Over 3 years, with compounded growth and dividends reinvested, his investment could grow to approximately $14,900. Over 5 years, assuming continued growth and reinvestment of dividends, Harry's initial $10,000 could potentially grow to around $19,500. Devon Energy's strategic initiatives include expanding its production capacity, investing in high-return projects, and enhancing its operational efficiency. The company's focus on cost management and capital discipline supports its long-term growth prospects, making it a promising option for doubling Harry's investment within 5 years. Harry's potential investment in Devon Energy is backed by the company's strong financial metrics, high dividend yield, and strategic focus on efficient growth, making it an attractive option for long-term growth and income. Dow Inc. Dow Inc. is one of the largest chemical producers in the world, specializing in the manufacturing of plastics, chemicals, and agricultural products. As of 2024, Dow offers a dividend yield of approximately 5.2% with an annual dividend payment of $2.80 per share. The company has a strong history of consistent dividend payments, reflecting its commitment to returning value to shareholders. Dow's payment ratio is about 60%, indicating a balanced approach between rewarding shareholders and retaining earnings for reinvestment and growth opportunities. The company operates with a strong return on invested capital, which supports its ability to generate substantial profits from its investments. If Harry invests $10,000 in Dow, his annual dividend income would be approximately $502. Assuming Dow continues to grow dividend by an average of 3% annually, his dividend income would rise to about $517 in the second year and $533 in the third year. Dow has demonstrated solid financial performance with a 5-year compound annual growth rate in earnings of around 7%. The company's strategic focus on cost leadership and expanding its product portfolio in high-growth markets supports its growth and potential. Additionally, Dow's strong balance sheet with manageable debt levels enhances its ability to sustain and grow its dividend payouts. Over a 1-year holding period, assuming a moderate 6% stock price appreciation, Harry's $10,000 investment could grow to approximately $10,600 plus $502 in dividends, totaling $11,102. Over 3 years, with compounded growth and dividends reinvested, his investment could grow to approximately $13,200. Over 5 years, assuming continued growth and investment of dividends, Harry's initial $10,000 could potentially grow to around $16,200. Dow's strategic initiatives include enhancing its competitive position through innovation, focusing on high-margin products, and optimizing its portfolio through strategic diversifiers and acquisitions. The company's emphasis on sustainability and environmental stewardship also positions it well for future growth. Harry's potential investment in Dow Inc. is supported by the company's strong financial metrics, consistent dividend growth, and strategic focus on expanding its market presence, making it a promising option for long-term growth and income. Broadcom Inc. Broadcom Inc. is a global leader in the semiconductor and infrastructure software solutions sector. As of 2024, Broadcom offers a dividend yield of approximately 3.5% with an annual dividend payment of $16.40 per share. The company has a strong history of increasing its dividends, reflecting its commitment to returning value to shareholders. The current payout ratio is around 50%, indicating that the dividends are well covered by earnings and leaving room for future increases. If Harry invests $10,000 in Broadcom, his annual dividend income would be approximately $350. Assuming Broadcom continues to grow its dividend by 10% annually, his dividend income would rise to about $385 in the second year, $423 in the third year, and so on. This consistent increase in dividends can significantly boost his overall returns. Broadcom's financial performance has been robust, with a 5-year compound annual growth rate in revenue of around 12%. The company operates with a strong return on invested capital of approximately 20%, reflecting efficient use of capital to generate profits. Broadcom's expense ratio is well managed, contributing to its high profitability and allowing for sustainable growth. Over a 1-year holding period, assuming a moderate 10% stock price appreciation, Harry's $10,000 investment could grow to approximately $11,000 plus $350 in dividends, totaling $11,350. Over 3 years, with compounded growth and dividends reinvested, his investment could grow to approximately $14,641. Over 5 years, assuming continued growth and reinvestment of dividends, Harry's initial $10,000 could potentially grow to around $19,300. Broadcom's strategic initiatives include expanding its semiconductor business, leveraging its strong position in data centers, and growing its infrastructure software solutions. The company's strong focus on innovation and acquisitions has bolstered its market position and growth potential. Additionally, Broadcom's strong balance sheet and with manageable debt levels and consistent cash flow generation underpins its ability to sustain and grow its dividend payouts. Harry's potential investment in Broadcom Inc. is supported by the company's strong financial metrics, consistent dividend growth, and a strategic focus on expanding its product offerings and market presence, making it a promising option for long-term growth and income. Realty Income. Realty Income, known as the Monthly Dividend Company, is a real estate investment trust specializing in generating dependable monthly income through its diversified portfolio of over 6,500 commercial properties. As of 2024, Realty Income offers a dividend yield of approximately 4.5% with an annual dividend payment of $2.97 per share. The company has a strong history of increasing its dividends with over 25 years of consecutive dividend growth, reflecting its commitment to returning value to shareholders. The payout ratio is around 83%, which is typical for REITs due to their obligation to distribute the majority of their earnings as dividends. If Harry invests $10,000 in Realty Income, his annual dividend income would be approximately $450. Assuming Realty Income continues to grow its dividend by an average of 4% annually, his dividend income would rise to about $468 in the second year, $487 in the third year, and so on. The steady increase in dividends can significantly enhance his total return. Realty Income's financial performance has been robust, with a 5-year compound annual growth rate in revenue of around 7%. The company's operating expense ratio is well managed, contributing to his high profitability and allowing for sustainable growth. Realty Income's strategic focus on acquiring high-quality single-tenant commercial properties with long-term leases ensures a stable and predictable revenue stream. Over a 1-year holding period, assuming a conservative 5% stock price appreciation, Harry's $10,000 investment could grow to approximately $10,500 plus $450 in dividends, totaling $10,950. Over 3 years, with compounded growth and dividends reinvested, his investment could grow to approximately $12,750. Over 5 years, assuming continued growth and reinvestment of dividends, Harry's initial $10,000 could potentially grow to around $15,800. Realty Income strategic initiatives include expanding its properties portfolio both domestically and internationally. Focusing on high-quality retail and industrial properties, the company's emphasis on maintaining a strong balance sheet with a low average leverage and high liquidity supports its ability to sustain and grow its dividend payouts. Realty Income's consistent cash flow generation from long-term leases with high credit quality tenants underpins its stable financial performance and growth prospects. Harry's potential investment in Realty Income is supported by the company's strong financial metrics, consistent dividend growth, and a strategic focus on expanding its high-quality portfolio property, making it a promising option for long-term growth and income. Portfolio growth. Harry is considering a $100,000 collective investment in 10 high-yield growth-focused dividend stocks, aiming to double his money in 5 years. The average dividend yield for his portfolio is approximately 4.732%, calculated from the individual yields. UPS 4.2%, MUSA 1.6%, MDT 3.28%, DUK 4%, PNC 3.98%, KMI 5.78%, DVN 9.46%, Dow 5.02%, AVGO 3.5%, and Realty Income 4.5%. The collective payout ratio averages around 55.8%, ensuring balanced approach between dividends and reinvestment for growth. These companies show robust 5-year compound annual growth rates, with most exceeding 8%. For a collective $100,000 investment, each stock receives $10,000. In the first year, Harry's dividend income would be approximately $4,732. Assuming an average stock price appreciation of 8% and reinvestment of dividends, the total portfolio value at the end of 1 year would be around $112,732. Over 3 years, with continued 8% growth and reinvestment, the portfolio would grow to about $140,167, including compounded dividends of approximately $14,196. By the 5th year, Harry's initial $100,000 investment could potentially grow to around $170,593, considering continued growth in dividends totaling about $23,660. This diversified investment strategy offers Harry a balanced mix of high-yield dividends and growth potential across various sectors, enhancing the stability and potential returns of the portfolio. This approach aligns with his goal of doubling his money in 5 years, providing a strong foundation for achieving sustainable, substantial growth and income. Don't wait. The market opportunities are ripe now. Start by researching further and consulting your financial advisor and making informed decisions to secure these stocks in your portfolio. Each day you delay could be a missed opportunity for growth and income. Subscribe now for more in-depth analysis and investment tips. Take control of your financial future today and start your journey towards doubling your investment. Thank you for watching and happy investing.